Will it be Fidelity? I don't know. It could be Apple that decides that they're going to put Bitcoin in their treasury. I
Yeah.
have no idea where it comes from, but what happens, I believe, is that you just get enough people that are using it and enough of a dollar value. It still needs, look, Bitcoin still needs another zero on the end of it on its market value in
Yeah.
order for it to be large enough and liquid enough for these institutions to really take it seriously. It's still a tiny, tiny, tiny asset across the whole world. So, but it grows organically. And then when they do adopt it, there's going to be no choice.
The influence of extensive institutional adoption on the industry has been the subject of numerous interviews and talks about cryptocurrencies ever since Michael Saylor's MicroStrategy accepted the Bitcoin standard and began piling up on the top crypto asset in 2020. Late in 2021, when the total value of the crypto market reached $3 trillion, the subject gained even greater attraction. Despite considerable declines from the all-time highs, a number of institutional investors, including some of the biggest asset managers in the world, like BlackRock and Fidelity, were actively considering entering the cryptocurrency and broader digital asset industry by early 2022. The interest has since decreased as a result of several macro developments that caused price collapses in 2022. However, renowned macro-analyst James Lavish is confident that interest will pick up again. Investors, both institutional and retail, are currently wary of cryptocurrencies and other risk assets due to the unpredictability of both the U.S. economy and the global economy, according to the former fund hedge manager. Due to the fact that these investors, especially big money investors like multinational corporations and sovereign wealth funds, continue to group Bitcoin with other crypto assets, they are giving the main crypto asset a wide berth. But that is certain to change soon, according to experts. In order to protect themselves from the ongoing and rapid devaluation of their national currencies, more and more inhabitants of nations like Lebanon, Zimbabwe, and Venezuela are turning to Bitcoin, claims the macro-analyst. According to experts, institutional investors will join the Bitcoin market in Massachusetts as interest rates rise, and the price of the cryptocurrency begins to rise once more, which will result in prices rising forever. In a recent interview with the Paul Barron Network, Lavish discusses his predictions for the future of Bitcoin, the U.S. economy, and a potential recession that he thinks will occur in the second half of the year.
Now what you're seeing, Paul, is that I think Bitcoin got ahead of itself. It was up like 80% for the year.
Right.
And so look, Bitcoin is kind of straddling between two barbells, right? So it's been the leading risk on asset for a long time, where it leads like the FANG stocks or anything that is a store of value. So it expecting the Fed to pivot, it's been that kind of leading indicator, right? So that's one side of the barbell. The other side of the barbell is with the banking crisis. We're seeing that it's now becoming something, and I've had people talk to me about this for the first time ever, that people are asking, hey, tell me about this Bitcoin, because I'm a little bit worried that I can't get my money from the bank. Well, so it becomes this asset that can't be seized, that can't be frozen, that can't just be liquidated by an irresponsible bank. And so that we're seeing both of those. And so Bitcoin kind of it benefited from both of those scenarios in the past month, and I think it just got ahead of itself. But be quite honest, this could easily go lower. Now we're seeing reports this morning and the Michigan sentiment, and you can only put so much value on these surveys, but it is an indicator that people are expecting stagflation. And so when you see inflation still, it's just hanging here, right? The inflation is hanging here. And we've depleted our SPR, so it's not like we have extra energy that's extra oil to dump into the economy in order to keep energy prices down. The inflation has been sticky, really sticky. And so the problem is that when you see inflation still remain high, right? But you have the producers pulling back on their production and then their inventories, then you're getting into something that really becomes stagflation. It's just a pass through. The cost of capital has risen so much that this is just passing through to the consumers. Yet they're running up their credit cards, and they're not going to be able to pay for these things. And so that stagflation scenario is what is concerning investors today. And that's what I believe is what is hitting assets like Bitcoin and gold, is because people are expecting that stagflation to be a painful period. And so and it makes sense to me. The problem is institutions have not, they just have not embraced Bitcoin in particular as a separate asset class. They keep lumping it in with all the cryptos. But so what I see happening, Paul, is over this next year and during this cycle, the knowledge and understanding of Bitcoin expanding exponentially. And so what I'm watching is the people who need it so desperately in Lebanon or Venezuela or Argentina, and they need a place to store their value, that their hard work, their energy that they've expended, that now comes back to them in a money that's debasing so rapidly that they can't even get access to it. So what are they doing? They're buying Bitcoin. It's the same volatility, but the volatility is up in the long term versus the volatility of their own currency, which is going to zero with huge volatility. So which would you rather? It's a no-brainer. So as you get more and more people into the ecosystem and using Bitcoin like that, it just snowballs, and it becomes that adoption curve that we saw that Fidelity is the one who actually published this last year. The adoption curve they expect to ramp up rapidly. You've got basically 5 institutions that control $30 trillion of wealth, right? So between BlackRock and Fidelity and State Street and Morgan Stanley and UBS, they control $30 trillion. One of them, if just one of them says that they consider Bitcoin a separate asset class and they're going to get a 1%, 2%, 3% position in it, everybody has to follow suit. If you just look at historics and just like we said, how quickly the Fed raised interest rates, right? And you look back at and one of the key indicators that I watch is the spreads between the 2-year and the 10-year U.S. Treasury and the 3-month and the 10-year U.S. Treasury, and those have been negative for a while now. And so typically you'll have that inversion, right? That yield curve inversion that will occur about 9 to 18 months prior to the onset of a recession. And so I'm expecting that this recession will start to hit in earnest at late this year. And so what we'll see is, like you just said, we'll see a drop off of those risk assets, and because the investors will need liquidity, they will be moving out of risk assets. And so I believe that we will see that, and that will produce the opportunity. So if you have some cash or some powder on the sidelines, then you'll be able to take advantage of that opportunity. And so things like gold and silver and Bitcoin, I think they'll all draw down along with every other asset that's out there, because what happens, Paul, what happens when we have a market shock? Everything correlates to one. They all come together and they all correlate to one, and they all sell off. You have your risk manager that walks onto the trading floor, and you've got your hedge fund manager, your CIO, and they just walk out there, and as that panic starts to take a grip on the market, they just walk in and say, sell 20% of everything. I don't care what it is. We need capital, we need cash, and we're going to get ahead of this. So if we do have margin calls in other areas of our portfolio, we're not scrambling to sell those assets in order to meet those calls. And that's just reality of what happened. So I think that it happens later this year, and that produces an opportunity. And if you have capital ready, you're going to be there to take advantage of the opportunity you just talked about. As the problem that I'm expecting and what I'm concerned about is that we don't kind of just slide into recession like other recessions that we've seen, these soft landings. I just don't believe that we're going to have a soft landing. The issue is that there's so much leverage in the system right now, Paul. There's so much leverage. There's so much debt out there. And people are living on credit. You're seeing the credit card balances rise for lower income and mid-income people. And then you're seeing not just the credit card balances rise, but then the cost of those balances every single month, because those rates have just been ratcheted all the way up to the top tier, right? So that's a problem. And then we're seeing there's more distressed debt, and every single day there are more corporate bonds that go into distress. And what is that? It's when a company can't pay the interest on its debt, it becomes distressed. And so we're seeing higher levels of distressed debt. And when that debt starts to fall out and these companies go bankrupt, well, that's loss of jobs, loss of income, and that GDP goes lower. You start this spiral. But what I'm concerned about, what I'm most concerned about, is that we have a true credit event. And so what we saw last month with the banks and with SVB, we saw that there's a great risk that these banks are undercapitalized. These banks are not prepared for what we could see on the very near horizon, which is the commercial real estate issue that's popping up, right? Mm-hmm. So my concern is that we don't step down into this, but we have a credit event that takes us immediately into a drawdown. And that's what worries me, because of all the leverage.
What did you think of James Lavish's interview? In the section below, please share your thoughts and views. Be sure to set on post alerts for future videos like this, subscribe to the channel, and indicate your appreciation for this one. Thank you so much for watching.